Hello, everybody. Chad Lubin, Cross Country Mortgage. I hope you're having a fantastic week. This is your weekly market update. We have a lot of volatility. I'll show you the charts in a second in mortgage bond trading. In stocks, there's what's called a VIX index. That shows the volatility of the stock market. In mortgage bond trading, and remember, mortgage bonds is what prices your interest rate. There is what's called the MOVE index. And the MOVE index right now is showing more volatility in mortgage bonds than Bitcoin. That's right. The most volatile asset, which are crypto markets. The bond market is more volatile and has been for the last 2 months than Bitcoin, which is a crazy stat. We're starting to see a ceiling develop in 10-year treasury, which mortgage bonds compete with. So we want those yields down. Right now, we're priced under 4%. We hope that that holds. And we're at a really nice level for mortgage bonds. The good news is last Thursday, we had a higher than expected consumer price index report. The markets went crazy and sold off, but they pulled back. So that there are starting to be some technical signals that show that this could be the height of interest rates. This could be the bottom of the stock market. This week, you've seen both markets perform very, very well, which means lower mortgage rates and higher balances in our 401k. A great report came out, the Fannie Mae Home Index report. And in the third quarter of our country, real estate still rose 0.2%. So if you watch these videos weekly, thank you to those that do and are religious to watching my market updates. You'll know that I discussed the indexes being, or the home price index, that it was going to slow down. There's no way we could keep up with the 40% appreciation we've seen the last 2 years. So the good news is, home prices are still rising, right? And when we look at it year over year, yes, it's down compared to last year, but there's no way you can expect the growth to continue. It would not be healthy. No one could afford a home. The September rental numbers just came out, and check this out. Across our country, the average one-bedroom rent was $1,500. 2 bedrooms was $1,800. That's up almost 14% year over year. Remember to use our rent versus buy comparison. If you're renting, you want to compare what your rent's going to be increasing to in your market. We have that data versus buying. We'd be happy to show that to you. And lastly, stay strong on this home search. There's many of you that I talk to that say you're going to wait. Remember that if rates drop, all of that competition that's been there the last 2 years is going to come back into the market, and that's going to drive up prices. The price that you get the property for is permanent. These interest rates are temporary. So I'm going to send you an email that shows the pros versus cons of buying right now, an example of a rent versus buy calculator that we'd be happy to show to you. I'm always here to answer all your questions. We're always here to get the dream home for you. Remember, there's less competition now. That is a good thing. I hear so many people think it's a bad thing that the market's not going crazy by 40%. I don't believe home prices are going to make a big retreat backwards. And it's happening in some markets, but not all. Chicago is very steady. For those of you in Charlotte watching this, it's very steady. For those of you in Charleston, we're still appreciating. So know that we have great resources, and don't make a home purchase emotional. Support your decisions with data and facts. We have those for you. We're always here to support you. 312-731-4939. Chad Lubin, Cross Country Mortgage, 312-731-4939.